Former New York Fed President Bill Dudley says the Fed has no choice but to get the taper done more quickly. And former Richmond Fed President Jeffrey Lacker said the Fed is headed toward a major policy blunder if it doesn't pick up the pace. But if Powell sticks with his plan, how can investors hedge against inflation right now? Let's bring in Kevin Mon. He's president and CEO of Henyon and Walsh Asset Management, and Jeff Krumpelman is chief investment strategist at Mariner Wealth Advisors. Welcome to you both. Kevin, I'll start with you. Are you concerned about persistent inflation, and what's your advice for positioning around it?
Yeah, I mean, you think that CPI rose 6.2% in the month of October on an annual basis. That's the highest annual rate of growth in 31 years. Plus, Americans are now paying more at the pump than they have since October of 2014. So inflation isn't going away. However, the Fed does have a TNT program in place to help control inflation, promote full employment, and also grow the economy back from the debts of COVID-19. That relates to taper, narrowing, and tightening. They've started the tapering process, and we believe that they will start to accelerate that tapering process such that we may ultimately see some tightening during the second half of next year with one and perhaps now two 25 basis point interest rate hikes.
Jeff, do you have a similar view? Are you concerned they're behind the curve?
We're encouraging investors not to get overly optimistic or pessimistic about current trends in inflation. And our base case really is that inflation will be significant this year, around 5%, but slow to 3% or below next year as some of these supply chain bottlenecks, labor shortages ease. And I think we have to remember that data can change relatively swiftly. Let's think back to 2018 when everyone was worried about tariffs and recession that never happened. The pandemic, we were thinking a Great Depression, perhaps, that never happened. There are embryonic signs that perhaps we're at peak bottleneck, and that's very important. And yes, we are building a portfolio that would include some inflation hedges in it, but ones that would do well if inflation and rates rise, or if we do get the moderation that we expect in our base case on the inflation.